Hello and welcome. My name is Roger Phillip of Rogers CPA Review. Today I want to talk about how the new tax reform will affect the CPA exam content. Now, the Tax Cut and Job Act, known as the TCJA, was passed on December 22nd of 2017. And as a result, there were many changes to the tax code. This is the first revamp of its kind in over 30 years with significant changes. So it significantly changed not only individual tax, but also business entity taxes as well. Let's talk a little bit about how the TCJA will affect the CPA exam content. Now, the tax reform will impact all the sections of the reg exam starting in January of 2019. This can account for as much as 80% of the regulation exam. Now, the AICPA has been very busy turning the exam upside down and shaking out all the broken pieces and putting it back together with revised and new multiple choice questions and task-based simulations. So they had to go through, make these changes, because normally when an exam changes, when material changes, there's a 6-month lag. In this case, they realized that they needed so much work to do, they needed to buy until January of 2019 for those new changes to actually hit the exam. Now, there are several different types of changes to keep in mind here. Some of the provisions are totally repealed and not replaced. So, for example, there's no more alternative minimum tax or AMT for corporations. Woohoo, right? Now, they still exist for individuals, but it's been repealed for corporations. There are also quite a few changes that have been made permanent, mostly for corporations, such as a new flat 21% tax rate for corporations versus the old graduated tax rate system, so that's not bad. Unless you've already taken your tax course, then all that stuff that's stuck in your head, like the old 70% DRD, 80% DRD, 100% DRD, those are the old rules. The new rates are going to change from 70 to 50% and 80% DRD to 65%. So say goodbye to those old percentages unless you take the exam during 2018. Before 2019, then all those rules that you've already learned will still be in effect. It really gets sticky when we get into the high volume of individual taxation changes, where many of them are temporary. By temporary, we mean 2018 until 2026, when in 2026 it reverts back to the old. And there are different rules that apply depending on the circumstances. So there's what we call exceptions. So, for example, unless the AICPA is specific as to how they're going to choose to test certain things, like alimony rules. Alimony rules are changing, which means that right now you got to know the old and the new. So what does that mean? So if you got divorced before 2019, the current rules, what that says is I make a payment to my ex, who I used to love forever, forget about it. So I pay them, I take a tax deduction, but it's taxable at their tax rate. The new rules starting 2019 say differently. What's going to happen then is that when I make a check, I can't deduct it, but the person receiving it is not taxable. So my suggestion, check out your marriage. If it's a little shaky, you might want to consider getting divorced during 2018. Otherwise, you don't get a deduction starting in 2019. Practical advice. Wait, it gets better. We have some tax provisions that are entirely new and pretty complicated, like the 20% qualified business income deduction, QBI, and that's for certain pass-through entities like S-corps and partnerships. The IRS still doesn't have all the answers on this one, so that's why it's a little bit gray. Now, the blueprint is what describes the different areas that will show up on the exam and how they're going to get tested. Is it remembering and understanding, application, analysis, evaluation, for example? So they're looking into this from an obsolescence point of view. What that means is these changes are still evolving, but we should get a revised copy of the blueprint by the middle of the year. Some of the obsolete items like corporate AMT will be removed from the blueprints, but new areas and topics will most likely not be added. So what that means is if they weren't testing the topic before, then it's likely that they won't test it in the future, regardless of whether that area changed, because some areas are beyond the scope of the exam because they're trying to test what a newly licensed 2-year, second-year CPA would need to know in the real world. Now, this doesn't mean that a new deduction, for example, wouldn't be testable. A new deduction for individuals would be testable under what we call Topic C, which is adjustments and deductions to arrive at AGI and taxable income. It also doesn't necessarily mean that you won't see any new representative tasks, since these are just examples of what you might see tested under a particular topic. So with that being said, Our recommendation is to sit for the reg exam now during 2018 before the significant changes hit in January of 2019. Avoid having to relearn everything that you've already learned in your college tax classes. That's what we're here to help you out. Now, if you need help working the reg exam into your crazy busy schedule, then our new SmartPath predictive technology is the most effective way to maximize your study time. It's a data-driven platform that tells you how much and where to focus your efforts. So it'll show you exactly what to study and how much to study, which takes the guesswork out of CPA exam preparation. It'll also help you pass the CPA exam much faster. Now, if you don't feel prepared to sit for the reg exam now during 2018, don't worry about it. As a Rogers CPA Review student, your study materials will automatically be updated to prepare you in time for the January 2019 changes. So no matter when you take the reg exam, we've got you covered, and we will guide you on the smart path to CPA exam success. Thank you very much for your time, and hey, study hard.